basically the variation or the volatility. You have to take care of that. We need to cut allocation to small caps and increase to large caps or to well discovered names. Since there is a big run up, some profit booking was inevitable, which has taken place. Broader and fundamental narrative has not changed. So, infrastructure, energy, real estate, etc., will continue to perform. Only thing is, be careful with stocks where liquidity is less. Market outlook, uh, global rate cutting cycle is getting started, and Fed is sticking to its earlier prediction of a cumulative 75 basis point worth of rate cuts this year. So, as Fed has remained with their prediction, market interpreted that Fed is comfortable with inflation being slightly higher for longer and celebrated this. So there was a statement from the Fed that once the inflation comes to 2%, then we will start thinking. So now people are thinking even if it is slightly higher, they will start off. And predictably, gold prices made a new high. Fed said that they are close to start tapering the quantitative tightening program also. So, which implies that there will be more liquidity, and where the liquidity flows is everybody knows it flows into stock markets only. In addition, the Bank of England governor said that Britain is moving in right direction to start cutting rates. A Swiss central bank effected a surprise rate cut this week. And all this is happening when the global growth is picking up. So it's a very good Goldilocks kind of scenario where growth is picking up, inflation is declining, and the interest rates are likely to be brought down lower. Now, Bank of Japan made a historic shift by abandoning its long-standing negative interest rate policy. Now, for Japan, the PMI saw strongest rise in private sector activity this month. Nikkei made a new all-time high on Friday. Just year to date, Nikkei is up 22%, the best performing big markets in the world, as inflation accelerated this month. So Bank of Japan abandoned its negative interest rate policy because inflation reached 2% in January. Bank of Japan had raised interest rate from minus 0.1% to 2.1% now. So there's nothing much, and this is the first increase since 2016. But the point here to watch is that you have to see the inflation data in Japan to see in case the interest rates are again raised. Now, it has an impact on carry trade, all the money which comes from Japan and gets invested all over the world. Now, in India, strong PMI growth in January-March quarter, corporate result this quarter should be good, providing support to the equity market. The composite PMI was 61.3 in March versus 60.6 in February. Hence, the GDP growth for the full year should be around 8% plus. It shows that long awaited pickup in private capex should also be around the corner. The risk is only that RBI, because the growth is good, may continue with restrictive monetary policy. Now, premiumization is an all-encompassing trend all over the world, and especially in India, with affluent consumers accounting for large space of consumption. Premiumization is a big trend. Consumer imports have risen because of that, and non-housing retail loans have also surged. Large share, because of these issues, large share of savings which the consumers are making is also coming into stock market via various routes. So this is one of the reasons, and it is likely to continue. So the demand for bikes, cars, good food, holidays, etc., is likely to continue. Accenture's lowering of full year guidance spooked the sentiment, especially for IT stock. What Accenture did was their Q2 earnings were flat. They lowered their guidance to 1 to 3% in local currency from 2 to 5% earlier. Accenture spoke about difficult demand environment and missing discretionary spending. In second half FY25, uh, there is a probability that the first rate cut would take place, and hopefully then the FIs will start putting in more funds into equity markets and ITs also, and IT services will have better demand outlook. So keeping that thing in mind, it is not the time actually to just sell the IT stocks. Maybe this is the bottom and it will change because it is moving in divergence. One side, the US economy is doing well, and on the other side, the people are lowering their guidance. Chinese smelters have apparently decided to band together to cut smelting output. This is leading to bounce in copper prices. Now, what is happening is mining companies sell copper concentrate to smelters who then process it into refined copper cathode. Now, spot fees for smelting fell to as low as $11 to a ton, or 76% drop in 2 months. So, what the Chinese smelters did that they decided to band together to cut the smelting output. So, the excess smelting capacity is being tapered by smelters so as to gain some pricing power. What the market expects is that this location would be disorderly. There would be a shortfall in production of copper, and hence the prices are going up. But be very careful with them because some of these copper stocks are trading at very high valuations. Now, recent correction offers a good buying opportunity as capex on railways and highways continues to boost order book. Now, this I was referring to with reference to IRCON. Now, this is the IRCON stock weekly chart. So, if you see here, it made a high after that big rally in railway stocks and then has been in a constant downward path and is now looking weak. The reason is, though they have a healthy order book of around 29,000 crore and it is trading at around roughly 19 to 20 times FY25 earnings. What is happening is, in addition, they are moving now away from railways to highways also. But the point here is that despite everything which is happening, FY25 EPS expected is around 11.1 and FY26 is 11.7 because of the revenue is not increasing the pace at which the stock prices are going up. So FY25, FY24 revenue is expected to be 12,000 crore, growing at 15 or 20% CAGR. So the problem here is that at 20 times, all the good news is already in the price. So if EPS is not going to go up substantially, then most of the good news is in the price. So there is not much of upside left in the stock unless there is a momentum which we have seen earlier also. Similarly, is the state with RVNL, where the sales are static, profit growth is also static, but the stock price has gone up 280% in this year. It has a EPS of rupees 7 and the stock is presently at around 250 rupees. So it is trading at very high valuations, roughly around 35 times. So these stocks with all the risk involved and other issues should not trade more than 20 odd uh, PE. Hence, it is fully priced, most of these stocks. So be careful with these stocks. Now, the stock which was in news last week was CG Power. It made a new high. It suddenly went up from around 450 levels, basically because of they're getting approval for setting up OSAT plant in Gujarat, so which is basically related to semiconductor testing and assembly. Now, point is that these revenues are around 2 months away, 2 years away. So just be careful with this, all this momentum. But it's a stock which you can hold for long term. It is getting slightly overbought now. So one has to be careful with these stocks and don't get caught into the momentum. Now, coming to technicals, US 10-year yield after it was rising up uh, last week, but after the statement of Powell, the yield has corrected and has now come to 20-day moving average. So let's see. Most probably, if the rate cut thing is takes strength, then it is likely to correct. So right now it is at 20 EMA. We'll see what happens from here. It corrected in the last 2 days only, and the dollar index started going up. The reason the dollar index has started going up, despite they are talking about rate cuts, is basically because of the dollar performing better than other currencies against which the DXY is pegged against. Hence, the dollar index, once it goes up, it increases the cost of all imports and other things for everyone. So this has to be watched. Brent crude is a issue. So till now, what was happening was that all the geopolitical issues were being ignored because the Brent crude was not going up. And I showed you here, it was in a declining trend line. It was not breaking that level, but this time it has broken, went up to 85 level. The reason is geopolitical tension and latest data on Chinese oil consumption, which is pushing the prices higher because Chinese are now increasing their consumption. So this is the reason, and the other reason is that the U.S. shale regions look to have peaked in terms of production. Hence, the oil prices were going up. Now, this has an impact on everything which is related to oil and all those issues. So just keep this Brent crude under watch. Now the gold prices, because of the news of rate cuts in the US, went up. It touched the 2200 levels and is expected to remain strong now for this year. Nasdaq, after this rate cut announcement, made a fresh all-time high, and all the US indices are doing well. Both the things, semiconductor issue and AI issues, are powering the Nasdaq. Sorry, gold I have covered. India's 10-year yield was generally at the same place, not moving much. So I'll have to see the further trajectory and the news from the RBI regarding the India's 10-year yield. But it should go down if the interest rates are cut. India VIX corrected and made a big correction, is now below the 20 and 50 day moving averages, and made a big red candle, came down to 12 level. The reason for the VIX correcting is basically because there is not much of volatility which is expected due to due to a strong possibility of a strong stable government coming back into power, because the general narrative was that at the election time the VIX goes up and all that, but it is not happening because that risk of unstable government is not there. Now, Nifty, if you see here, Nifty 50, this is a 1 week chart. The trend of making higher highs and higher lows is continuing. So we'll have to watch for this. So if it breaks this 21,200 odd levels, then the trend will change. Right now, the trend is higher highs and higher lows, so it is bullish. The two distinct swing lows on the weekly chart were in February or March, 2023 and October 2023. So it made a low here, but we'll have to see from what happens from here. Till the time it is above the 20 EMA, it is strong. This is a daily chart. So if you see here, Nifty corrected after it made a high of around 22,500, took support at 50 EMA, and then has bounced back from there in the last 2 days, that is Thursday and Friday. And here it formed a doji, so it could have moved, but after that the doji was formed because of the impending news of from the Fed. So once it became positive, the market started going up, but it took support at 50 EMA, so that was a critical level. Next lower level is around 100 EMA, which is around at 21,350 odd. So watch out for that. But right now, this 50 EMA is a decent support. Now, this is the hourly chart. So if you see here, it was on a declining trend line after making a high, and after that, after the news, the declining trend line has been broken, and now Nifty is looking to go up. On Friday, it nearly touched 22,200, and depending on the performance, we'll have to see. But till the time it is trading above the 50-hour average, it is strong. So for our short-term traders, this 50-hour average becomes very important. Now this is that Nifty option chain 25th April I was talking about. So if you see it at 22,000 strike, the call side premium is 518 and the put side premium is around 188. So roughly around 700 rupees total. So it implies that if you sell a straddle here for April expiry, 25th April expiry, you get 700 rupees right now. And so you are safe from 21,300 to 22,700 levels for the next 1 month. So till the time Nifty trades between 22,700 and 21,300, you will make money. Beyond that, you can always, if the movement is taking place in any direction, you can adjust your position. But this is a relatively safe trade to take. You can take positions depending on your comfort level of the Nifty. So that is what it is. Anything from here 21,100, 22,100 to 21,900 is also the same levels.
Tarun, there is a guy called Sundar, who is a famous character in the option selling.
Yes,
I
sir.
think he is one of the biggest option sellers in the country, and he was fined by the SEBI also. I've been listening to him, and he has been advocating that you sell you sell the farthest expiry available. That I think usually is December expiry, and then you get a certain amount of premium and all, and by and large it works out to be beneficial. So just like your views on, if you can study this a little more. I mean, I have taken this 22,000 basically based on, they think, okay, it's a good premium, and I did not even realize till the time you told me that the premium per lot is 35,000. मैंने calculate नहीं किया था, देखा भी नहीं था actually. I just took a call now. Would it be advisable to go for far strikes like October, November, December, or whatever is available?
Only problem is, sir, that are you aware of the volatility at that time? That is the only issue. Otherwise, that's good. But you get premium and all those issues.
You get
But in case right now the volatility is low, in case the volatility goes up, the premiums goes up, then that is the risk.
What's the risk, is it?
Nothing wrong. You are getting this thing. If your normally thought process is that the markets are going to go up only, then you taking a long-term puts is very good, or buying long-term calls is again good. So nothing wrong in that.
Elections are settled. Maybe perhaps one could start doing this.
But
Suri sir and Tarun, Suri sir I want to add a very important question here. दोनों में कुछ भी करना है, it is much safer to be in call than in put. ये जब I have got long experiences में, especially COVID के time नीचे का 10 सर्किट बंद होता रहा है for puts. So बहुत one cannot handle it. देखना पड़ता है daily. So Suri sir, call में जाना ऊपर ठीक है, my view, and I am little conservative. Experience कर रखे है, तो choices and decision is yours.
You are saying that better to sell calls rather than puts.
हाँ सर, कॉल में क्या थोड़ा मार्जिन ज्यादा लग जाएगा, बेनिफिट ऑफ पुट नहीं मिलेगा, बट कॉल दूर का बेचना सेफर, क्योंकि कहाँ भाग जाएगी मार्केट 20% ऊपर सर और 3-4 महीने पुट नीचे जाते, कोई ब्लैक स्वैन हुआ तो पकड़ भी नहीं आएगा सर आपको पुट को हैंडल करना. बाकी तरुण विल सजेस्ट.
That's an interesting view. That is good, sir, because even if you see here, the call premiums are higher. The reason call premiums are higher is because more people are buying calls.
Yeah.
So actually, if you saw here, for 22,500 bucks was the call premium, and 200 rupees was the put premium. Because more people are buying calls. Buying calls means they are bullish. So though what your point is right, that upside is always capped, but the downside is something can always go wrong. So for long term, yes, that is logical. So
Tarun, with Modi third term coming in, upside का भी पता नहीं है.
Sir, देखो point क्या है sir? Like, please understand, market doesn't goes down or goes up on the same news twice. So it is already mostly priced in, sir. There are two things, that US rate cuts and the
Yeah,
political stability is priced in.
yeah, I agree.
तो अब एक बार प्राइस हो गया, कितनी बार वो प्राइस करेगा मार्केट सेम चीज को? दे मे बी अ मोमेंटरी अपस्टेक, बट it will not be a rally because of that. Now people will have to see in case there are any market friendly rules and
Policies.
regulations which come in the budget.
Yeah, okay, right.
So अब that victory is discounted, fully discounted. It is in the price. अब बार बार उसी चीज पे, या तो it has to correct to 20,000 levels for it to again go up on this news. But
Yeah.
if it is not corrected, then it is fully discounted, sir. So that is my point.
Yeah. Vipin,
Okay.
thanks a lot. Taken your advice. We'll take it seriously. What do you feel in case I sell 2 calls, 1 put?
सर सूरी सर, बिल्कुल नहीं. हम लोगों को वी ऑल आर एट अ स्टेज, सीनियर सिटीजन, आप तो बड़े हो मुझसे, हमको उतना ही खाना चाहिए जितना हजम हो जाए. ये ना हो कि खा लिया ज्यादा हजम ना हो. आई एम इन्फेंट्री मैन, लॉजिक, दैट्स माय व्यू पॉइंट. बेटर टू बी कंजर्वेटिव एंड धीरे धीरे कंपाउंडिंग होने दो सर. दैट इज माय थॉट सर. बाकी तरुण इज द बेस्ट जज, इज बेटर देन मी टू make us understand, sir.
Thank you.
No, maybe Suri sir, Vipin is telling because Suri sir is telling because of the margin reduction actually by selling 2 calls and selling 1 put. So that may be the reason that he is trying to reduce the margin
No, but
requirement.
if you see here, sir, if you see here, the margin requirement for this taking a straddle at 22,000 would have been around 60-70,000 rupees only, sir, right? And so you see the gain. Gain is roughly 50% of that in
Yeah.
case the market remains at 22,000.
As compared to stock, there's much more percentage gain, ROI
That's
better.
what I'm saying. So, and what is happening is the indexes are relatively stable as compared to stocks where there is more volatility right now. So this is what my only point is. So
Yeah, I
बाकी आप किसी भी डायरेक्शन में जाओ सर, मतलब 24,000 का कॉल बेच दो या 20,000 की पुट बेच दो, बात तो
सर
मतलब
एक और मैंने चीज देखी है सर, that when you sell call it's much more safer because they will say whoever does this, they never take the stocks beyond a certain limit. They will ensure that for this series doesn't go beyond that. So selling call perhaps I think is much more safer than selling put.
We will discuss that later, sir. I don't think that is a very correct statement, but we will discuss that later. Right, sir? So, just switch off your volumes again, please. Reliance, it went up to 3,000 plus and has corrected. It came below that trend line and then it bounced back. So, till the time it is above this 28,500 and 2900 zone, it is positive. So, this is the zone to be looked at very carefully. The good point here is for Reliance is that people are pricing in that increase in the subscription charges for Jio post elections, and that is the reason why Bharti is also going up. ITC, there's a weekly chart, so if you see, it has bounced back and now heading to this 20 EMA. So once this 433 is taken out, it is getting stuck here, finding resistance here, but the volumes are good. So if it gets past this 433 levels, then it is likely to go up. So we'll have to see here. Always there is a risk of more taxes on cigarettes, etc. But otherwise, it's looking good. Bharti, as I told you, it has made a fresh all-time high. This is one stock I brought out last week also. This is in momentum. Right now, it is slightly overbought, but it is in momentum, and despite all the volatility, it is going up. So this is good, and I think one of the news is they are coming up with a IPO also for it's a regional part of their business. They are coming with a IPO also, so there would be some earnings for them because of that. L&T, it has made a cup and handle. Now it is going up. So if you see very carefully, this is a daily chart. It has taken a support at 50 EMA and has bounced back from there. So probably, actually, we kept waiting for it to reach that 3,300 level, but it didn't reach there. It took support at 50 EMA and has bounced back. So at these levels, it's a very attractive place to enter into stocks like L&T because infrastructure is a long-term story. This is Nifty Bank. This is a weekly chart. It has made lower lows now, and the lower lows and lower highs. So it's in a downtrend. Now, last week was positive in the end, but it was looking weak otherwise. Now, here, if you see the daily chart, generally it takes support at 200 EMA. What happened last week was it tested the 100 EMA and bounced back from there. It went small time, it went below also this 46 146 level, but it bounced back in the last 2 days. It has tried to break this 20 EMA also. So if it is above 20 EMA, it becomes positive and then try to go to 47,000 and higher levels. And last week was supported because of ICICI Bank guiding it. I'll show you. This is a weekly chart of HDFC Bank. So if you see here, now it is on the weekly chart, it is moving around the 200 EMA and it is moving around there. So it is good part is that it is not breaking that after rising from the 1360 level, but it has to cross this 1500 level and then higher for some momentum. Otherwise, it looks weak. And I think people are waiting for this quarter's results also for taking a view on this stock. ICICI Bank is broken through that trend line, rising trend line, and it is the one which is leading the market. It went above 1100, then it corrected, but it has bounced back. So this is the stock till the time it is above this 1080 odd levels, it is strong. Good support is around 1024. So one can go long from here for ICICI Bank. PSU Bank Index, now you will see all PSUs will have similar chart. Made all-time high, rising from last year, March, April. Then this dip came, big dip. And then last week it bounced back subsequently. But it is now, it was highly overbought. It has now corrected. So RSI has come to below 70 now. So slightly be careful because some valuations are very high. I'll show you some of that today. SBI, because of issues other than financials and operational, it has stopped the journey to 800 plus, and now it took support at that rising trend line. So that was around that it has around 740 or 735 levels. So it has bounced back from there. So last week was positive. I hope their other issues are over because this is a decent performing bank. Another bank which is PNB, similar chart, rising, then corrected, and now a green candle. So we'll have to see whether it resumes its rally or goes to the 20 EMA and then takes support from there. So be careful. Right now it is in consolidation phase. So it is these PSU stocks are not going anywhere, but mostly this quarter results will be still good. So these valuations are justified. The PSE index, similar chart to the PSU bank chart, same dip here and then rise here, and the RSI has corrected. So one has to be on wait and watch mode here. Now, one of the stocks is NLC India. Now it had a OFS. It went much below. The OFS was at around 220, so it went below the OFS price, but then bounced back last week. So this is and it's now at 20 EMA. So this is a good stock to be watched at because this covers both mining and power space. So this is one, and they are dishing out a lot of contracts for power projects. But the point is, if you see here, the trend is declining. So it has to break this trend for any up move, major up move. Because if you see, it's correcting and going always making lower lows. So one has to be careful with these stocks. Coal India, similar stock. This is a weekly chart. It has been correcting, but I think this 400 odd level should be a decent support. It took support last week at 400, then bounced back a little from here. So we'll have to see what happens here. Right now, the valuations are now slightly corrected because it was in a big time momentum had gone to 480 odd level. The rise started from September last year, where it suddenly shot up from around 240 odd levels, and then we have seen the journey. IT index after this essential warning corrected, and on the weekly chart it has come below the 20 EMA. It had a big negative week, so one has to be careful here to be wait and watch mode. But I think once it corrects a bit more, buying should come here. Uh, TCS, it was looking to break out, but now it has come to its support of 20 EMA. Now here again we'll have to see whether it takes support here or goes down further, because it can always go down further, go down because it has risen pretty high from that 3,000 odd levels to 4,000. So we'll have to wait for this quarter results. Similarly with Infosys, it was going up, retracing back, and now it is correcting. It has come down to its 50 EMA now, and if it holds here, then it's good. Otherwise, it will come down to this 1400 and 1360 odd levels. So be careful with this stock. If the results have to be decent and management guidance has to be good, otherwise they are headed lower. One sector which I'm covering for the first time is a Nifty auto sector. It is performing well. If you see here, among all the other things, Nifty autos performed well in the last week, basically led by three stocks in the auto index: Maruti, Bajaj Auto, and Eicher. These are the three stocks which performed excellently and that carried the index higher. So this is one index, and the auto ancillaries which should do well. Energy index, if you see here, similar chart to the PSE index, corrected from all-time high, and now it will consolidate. NTPC, this is a weekly chart, clearly took support at 20 EMA, around 300 odd, and has bounced from there. So again, it tests this, so that will be a good opportunity to make a first entry here. All these stocks, because they are now showing you a pattern in case it takes support again here, so that will make a double bottom. Nifty Infra Index, similar charts as we are seeing in all indices, made an all-time high, then has corrected. So we'll have to wait and watch these stocks. Midcap Index, it was correcting for last 5 weeks or so, and it tested the 20 EMA, bounced back from there. So we'll have to see from here what goes on, and result season will also determine the future course of these stocks. Similarly, with the small cap index, it is exactly poised now at 20 EMA. It has corrected over last from February onwards. So one has to be careful with these stocks, because if the indices have corrected around 10-15%, stocks have corrected around 30-40%. One of the stock which part of this small caps is IRFC. So if you see here, after the January highs, it has corrected, and despite some bounce last week, it is again still on a declining trend line, because these stocks had gone up too high based on the railway theme and all that. So one has to be really careful with these stocks. Now I'll cover three stocks today. First is Carborandum. It is a definite path to become a major material science company over long term. Probably the only listed player in India to have an extensive portfolio of performance materials. It is part of that Murugappa group. So the parentage is good. So the corporate governance would not be a problem. It operates through three businesses: abrasives, bonded coated ceramics, industrial ceramics and refractories, and electro minerals, silicon carbide, alumina based electro minerals, which form 37%, 23%, and 38% of its FY22 revenues. It has 31 manufacturing locations across India, Russia, South Africa, Australia, and China. 45% of FY22 revenue from overseas customers. Provides high quality material solutions and world class services in abrasive, electrominerals, ceramics, refractories, energy storage materials, serving customers in diverse industries including engineering, fabrication, auto and auto components, infrastructure, steel, gas, glass, power generation and distribution, mining and aerospace. Posted sales, EBITDA, PAT, CAGR of 12%, 21%, and 24% it will post over the next 3 years, with ROE over 17 to 18%. It will benefit from rapid growth in clean energy sector like SOFC. SOFC is solid oxide fuel cells, electrolyzers, and wind nacelle covers. These are required for basically the uh, wind turbines. This is basically engineered ceramics, accelerated investment in defense, composites, a capex revival in core industries such as steel, cement, mining, refractories, where ceramics, and a pickup in transmission and distribution capex globally, that is metallized cylinders. They have one of a company in Russia. It's called VAW. War remains one of the lowest cost producers of silicon carbide ex China, and it caters to the Russia and the European markets. Now, see their expected financial summary. So if you see here, their revenues are rising, EBITDA is improving, and PAT is improving. Now EPS this year is expected to be around 23, but after this year, they're expected to have good growth. So EPS expected over next 2 years is 30-37, and P is declining because of that. EV EBITDA, so the ROE is going up, ROIC is improving, EBITDA margins are improving, EV EBITDA is declining, so that indicates basically that the stock is becoming less expensive. Similarly, with price to book also is declining. So this is now segment-wise performance. If you see here, abrasives are roughly 40% of the business, ceramics roughly 20%, and around 30-35% is electro minerals. And if you see the around 10%, but the ceramics are expected to grow the most over the next few years, followed by electro minerals and abrasives. And margins are also higher in this ceramics business, but these things keep changing as per the requirement or the demand. If you see the growth part, sales growth is expected to be strong over next few years, 10 to 12%, but EBITDA is likely to improve further. EBIT is again up, and the profit is also expected to go up because of more efficiencies and lesser cost. So the ratios are good. Gross margin is 60% plus, EBITDA margin around 15-16%, PAT margin double digits, ROE, ROIC, dividend payout, etc. is decent. Now let's see the chart. If you see here, it was because FY24 was a weak year, and the stock was declining. And now, because of this positive narrative around these abrasives and ceramics and this business, stock has suddenly spiked up and has broken above this declining trend line. So it is expected to go up further, and just keep this in watch. Right now, it is becoming slightly overbought. Now, if you saw the EPS of around 37 for FY26, at 35p, you can safely assume it will go to that 1300 target, which is going now in the last 1 or 2 days. So it will benefit from revival in domestic industrial activities and increase in private capex. And it is commercializing the new products in ceramics and electro minerals. So just keep this in radar because most of the people don't own this stock. Next stock, which I had covered around 6 to 8 months back, is ITD Cementation, is among the leading EPC engineering, procurement, and construction players in India, undertaking heavy civil and infrastructure projects. Diversified presence in high growth sectors such as maritime structures, urban infrastructure, mass rapid transit system. They are making metros, highways, bridges, and flyovers, hydro dams, tunnels and irrigation, industrial structures and building, etc. It has a strong parentage, which is helping it. That Italian Thai Development Public Company Limited (ITD) is the promoter, and this parentage provides access to latest technology and know-how, international designs and engineering, as well as skilled person to augment the growth. The outstanding order book is around 20,000 crore as of December 23, which is 2.9x of its 9-month FY24 earning. And healthy revenue visibility for medium term. Company has around 13,000 crore worth of orders in pipeline. FY25 revenues are guided to grow around 20-25%, led by big projects such as Ganga Expressway in UP, Navy project, Bangalore and Chennai Metro, etc. The company will focus on bigger but lesser number of projects for efficient execution. 9 months FY24 sales, EBITDA, PAT were up 57%, 92% and 112% year on year, respectively. So if you see here, they are done around 5,000 crore in FY23 and expected to do around 7,500 crore this financial year. EBITDA is roughly 740 crore, so that means roughly 10% EBITDA margin. Profit is expected to be nearly doubling now, and margins are, as I brought you, around 10%. ROE is improving, and that is why the profits are doubling. And P is, as of current earning, the P is reasonable. Next year is expected to do around 9,000 crore and do a net profit around 378 crores and all. So just keep this stock in horizon. Now, which orders they're doing? A marine order. They're doing this is in Bangladesh, Bogura Kalaikar, 400 kilovolt double circuit transmission line. 6-laning road project in Uttar Pradesh, that is Ganga Expressway, West Container Terminal in the port of Colombo, Sri Lanka, wharf and approach works at Jawaharlal Nehru Port in Maharashtra. The Navy project is this, they are making this Thal Sena Bhavan in Delhi, and piling and civil work for Cone Oven project at Hazira plant, Gujarat. So if you see here, they are in diversified infrastructure sectors, and across they have the order book encompassing all, and that is basically because of their parentage and the capabilities they have achieved. EBITDA margins are going to be improving, EBITDA, etc. Debt is declining, debt to equity is under control, ROE, ROC, all etc. improving. EPS is expected to be 14 to 15 this year, and around 18 to 19 next year. So debtor days, etc., inventory days, creditor days are all under control. So let's see the chart. I think we got it around here on that October fall, around 180, and after that it has risen. Now it has corrected. On 13th of March, it came near that 200 EMA. That was a very good opportunity. But if it corrects from here, this is an opportunity to accumulate this stock on all dips, because if it is in high quality infrastructure and 15 rupees EPS for this year, that means it is at roughly 20p, which is very good with the kind of growth it is offering. Now the next stock is Cochin Shipyard. Because I'll cover this because last time I had covered the Garden Reach shipbuilder. I just wanted to see what is the inter-se performance of all the shipyards. Order backlogs stood at 22,300 crore as of December 23, including 21,500 crore in shipbuilding and 800 crore worth of contracts in ship repair. Shipbuilding segment contributed 75.4% of the total revenues, while ship repair contributes the balance 26%. Advanced state-of-the-art infrastructure capacity up to 110,000 DWT, that is dead weight tonnage in shipbuilding, and up to 125,000 DWT in ship repair. With commissioning of new dry dock facility and international ship repair facility, company's capability have increased significantly. Large-scale contracts for Indian Navy like anti-submarine corvettes, next generation missile vessels, post-commission works of indigenous aircraft carrier are expected to witness meaningful execution over FY 25-26. Commercial segment electric vessels opportunity emerges from Europe as 2,500 vessels are scheduled to be replaced with green vessels. Basically, they're changing the batteries here. to lithium-ion batteries from the traditional lead-acid batteries. Discussions on another aircraft carrier are also in advanced stage and offers additional order opportunity of 40,000 crore. So that is part of the decent narrative. But point here to be seen here is if you see their financials, FY24 they did 3,400 crore, and FY24 also they are expected to do 3,400 crore. So the revenues were declining when the stock prices were going up. Now they are expected to do a CAGR of 22% over the next few years, next 2-3 years. But this is a concern as compared to others. Similarly, EBITDA was declining, net profit has declined, while the stock prices has gone up, EPS has declined. Now it is expected to do around 26 rupees EPS this year, which is most likely because 9 months they have done well. But from here, the EPS's growth is not substantial. Hence, ascribing high valuation for a longer term, etc., is not that reasonable out here. And it is trading at around 30 plus P already as compared to others. I will cover others also, other shipbuilding things also. And ROC is declining. ROE is also from 17, 14 odd, it has declined, and also one has to be slightly careful with these stocks. So FY26 EPS is expected to be around 30 rupees. We'll have to see what happens here. So that makes it 30 rupees. That means it is 900 plus. So that means it is 30 times already. And other parameters are decent now because of the various issues. ROE, ROC, we have discussed. Debt is not there. So that is a good part. This is a balance sheet. You see hardly any debt. And they are doing, their balance sheet is strong. So that is not a problem. These are their orders. So shipbuilding order book of 21,500 crores. They have a post-commission works of indigenous aircraft carrier. This ASW, SCW, which is anti-submarine warfare, shallow watercraft, and NGMV of Indian Navy, which is next generation missile vehicles. And this is the for commercial, this is for defense, commercial, domestic. They have various projects, and for commercial exports also, for European clients, etc. They are making vessels, so they have these orders in pipeline. But the point here is that revenues are 4,000 odd crore. I showed you here. It's barely making next to next year also barely making 4,000 crore. So how much are they able to execute, etc., is a point. They have certain subsidiaries also, which are also contributing. So order books position, if you see, defense and commercial exports are higher, and commercial domestic and subsidiaries are slightly lower. And since they are doing a lot of green vessels, so that complement has increased as compared to conventional vessels. And ship repair orders of around 7,000 crore, 700 crores. Now, if you see their chart here, it had run up quite high, and FY26 EPS is expected to be 30, and it had already factored that in. Then it corrected, came to its 100 EMA, and then bounced back from there on 13th of March. So we'll have to see. But now I just wanted to highlight uh, all three shipbuilders. So if you see here, I've showed you Cochin Shipyard, approximately 4,000 crore revenue, EPS of around 25 to 30, 26 to 30 rupees, and current market price is around 902. So it means the PE is around 30 or 30, 32. While GRSC, that Garden Reach Shipbuilders, which I covered last time, has a revenue of 5,000 crore is expected. That is 1,000 crore higher than Cochin Shipyard for FY25. EPS is around 37, 38, and current market price is 781, and P is around 20, 21. So much cheaper. Now the last one is Mazagon Dockyard. Here again, they are doing a revenue of 9,800 crore. That means their revenue is the combined revenue of Cochin Shipyard and GRSC. EPS of around 85 to 90, which is expected for FY25. The current market price is 1898. So for PE, it comes to around same 2021. Hence, in my opinion, despite this correction and all that, this stock, as per the growth and other comparative relative valuation, is expensive. It has to correct more, and then there is a big risk in case they don't perform. Any quarter performance can go down because of the booking and all that they are doing. So one has to be very careful, and these are not no longer stocks which you can buy at any price, because order book is not important. It is the execution which is the key issue, because you may having a 30,000 crore order book, but if you are able to do only 4-5,000 crore a year, it's of no use. So it doesn't goes into your P&L. I have finished. We'll take questions now.